Hi, everybody. It's Peter Schiff again. It's Friday, May 22nd, 2009. What a week in the markets this week with the bond market, with the dollar. Again, we continued yesterday's rout in bonds and the dollar today. Bonds got hit hard. The dollar again, the dollar index actually traded below the 80 level. We had a 79 handle for a while. We closed near the lows of the day. I've been talking about that level for a while. We finally reached it. I still think there's a lot of downside left in this run. Meanwhile, the commodity currencies were up big again. If you look at the moves in the last 2 months, the New Zealand dollar is up better than 30% in 2 months. The Australian dollar is up better than 25%. So the dollar is really coming under pressure. And the dollar was declining up until the financial crisis last summer. The dollar had been declining for years. That decline was interrupted by the financial crisis and that knee-jerk reaction into the dollar. But that's over with, and the dollar is simply resuming its descent with a vengeance. And remember, the same reason we had a financial crisis, that's why the dollar was weakening. It was the same economic problems. And everything that the government has done thus far in the name of solving our problems has merely worsened them and actually made the outlook for the dollar that much bleaker. And, a lot of people were really fooled, by this head fake. I was on CNBC this morning on the call. I'm sure you'll be able to see that on my website or up on YouTube at some point. But it's amazing how when I talk about decoupling and I talk about how well foreign economies are doing, China's, today forecast GDP growth of 8%. And, even though their exports are shrinking, manufacturing is still growing because obviously they're consuming more of their stuff themselves. But there is decoupling. You can see it in the markets. But when I mentioned it, the announcers jumped all over me to say, well, wasn't that decoupling theory completely discredited? We all know that that's nonsense. It wasn't discredited. Just because we had a few bad months in foreign markets, the dollar, granted they were pretty bad, but it had to do with the short-term reaction of our creditors taking a big hit on the money they loaned us. But as I said on numerous occasions, the foreign economy is sound. It's the domestic economy that's in trouble. And sure, foreigners have taken a hit on the money they've loaned us, but they're going to absorb those losses and move on. Their economies are stable, and once they, use their resources more for themselves, they produce for themselves and they save for themselves, they're going to see a lot of growth. It's also interesting on that CNBC show that one of the announcers jumped all over me. When I recommended buying foreign stocks, she said, well, don't you work for Euro Pacific Capital? Aren't you just recommending these stocks because that's your mission, because that's what your firm does? First of all, I've never seen them ask those questions to everybody else. You've got stockbrokers, mutual fund managers coming on CNBC all the time, touting their books, saying how great the market is, how great the U.S. economy is. No one ever questions their ethics. No one ever says, aren't you just talking your book? Aren't you just trying to sell stocks? It's interesting how they reserve that for me. But of course, I own Euro Pacific Capital. The reason that Euro Pacific Capital is recommending foreign stocks is because that's what I think is the best place to put your money. If I thought otherwise, that's what I would recommend. That's not, the mission of the firm. It's not the mission, and I'm simply trying to sell what the mission is. The mission is what I believe we need to do. I want to help protect my clients and anybody who will listen to me from the destruction that's going to come to our currency and our economy based on misguided monetary and fiscal policy. But, the people at CNBC still haven't figured that out. Speaking about CNBC, I don't want to just necessarily jump on them, but I was watching CNBC today, and several people were coming on talking about gold. And there was one guy on there saying that gold is the most irrational investment he's ever heard of in his life, that he thinks people simply buy gold because they don't know what else to do, so they just buy gold and it's irrational. Somebody else said that, it was stupid, that he would never recommend that his mother buy gold. Well, I can tell you, my mother owns a lot of gold. I sold it to her, and she owns gold stocks. And I'm not buying gold irrationally. It's a completely rational decision. I'm not buying it by default. I'm buying it because I understand the fundamentals. The problem with the critics on CNBC is they're clueless about the fundamentals. What's irrational is their faith in paper. And they don't understand that gold is money. Gold has intrinsic value. Storing gold as money and to protect your purchasing power, that makes sense. Putting your faith in little pieces of paper that were running off the printing press makes no sense at all, especially when you have all the historic examples of fiat currencies run into the ground. And we're repeating all of their mistakes. So that's what's irrational. But look, let everybody keep making fun of everybody for buying gold. They don't understand it. Meanwhile, since 2000, the Dow has fallen from 43 ounces of gold to fewer than 9 ounces of gold. So what's irrational? Holding overpriced stocks or gold? Or what's even more irrational is holding bonds. Again, lots of talk today about the loss of the AAA rated credit, potential loss for U.S. sovereign debt. I mentioned that on this cast yesterday. Everybody attacks a straw man. They say, oh, no, the U.S. government's never going to default. Default is not the issue, as I said. If you happen to live in Europe and you invest 100,000 euros in U.S. treasuries, and because we print so much money, by the time that bond matures, that investment is now only worth 50,000 euros. That investor has lost half his money. That's the same thing as the U.S. government simply defaulting on half their obligations. So the credit rating has to do with the chances that we're going to pay off our debts by printing money. And what's the chance of that? Well, it's 100%. The government has already told us that that's going to do. And to be honest, when everybody's talking about, oh, we'll never default would be a good thing. I mean, we should default. I mean, there's no way we can pay this money back. So we're going to default one way or the other. I think it's worse to do it through inflation. I think if the United States government could get together with its creditors and level with them, we can restructure this debt without destroying our currency. Instead, we're going to pretend we can pay the debt back, and we're going to destroy our currency. And it's not just the people who loaned us the money who are going to lose. It's every American citizen who has money in the bank, who has money under his mattress, who has a life insurance policy, who works for wages. We're all going to get destroyed. It's too bad our politicians aren't honest enough to actually default. They're going to do it secretly by printing money. But that's what the people on the news don't seem to understand when they're weighing these risks. Also, I wanted to mention, as far as some of my TV appearances, I finally, I'm going to be back on the Glenn Beck show. I haven't been on the Glenn Beck show since he left Headline News. I used to be on his show all the time, 2 or 3 times a week. I guess there was some politics on Fox that was maybe keep me off, but I'm scheduled to be on Tuesday on Glenn Beck. So we'll see. Maybe it will become more of a regular reoccurrence. We'll see, but I'm going to be on Tuesday, so make sure to watch. I think I'm also going to be on Fox Business that Tuesday. I finally was able to convince the producers, or my PR people were, to get the Daily Show to book me with Jon Stewart. I don't have a date yet. I think it's going to be in another 2 or 3 weeks, but that should be a very interesting appearance. He's been famous recently for really making fun of the people on CNBC that got it wrong. I'm wondering what he'll do when he's confronted with me as one of the few people on their air who actually got it right. But when I actually figure out when I'm going to be there, I'll let you know. Meantime, all my TV appearances, I try to mention them on my website at Europac.net. We'll see what happens. We have a 3-day weekend now. The dollar is going into this weekend very, very weak. Bonds are looking weak. And interestingly enough, a lot of the foreign stocks that we track and that I buy, last night, even though the Dow was off about 130 points, foreign stocks held up. More of the stocks that we're buying were up last night than down. So it seems interesting. It seems that now foreign stocks are able to rise even as U.S. stocks are falling. And in the event that U.S. stocks are falling, we're no longer getting a flight to quality move into the dollar. We're getting a flight out of the dollar. And so that's helping the foreign markets. We'll see if that new trend continues. And I think, I think based on these charts, I think we can see another big move down in the dollar between now and maybe August, September. I think the dollar index, which has now hit 80, I think it can trade down to 70 by the end of the summer. It might have a couple of rallies on the way, but if you look at the charts, that's what I think is going to happen. And I think by fall, if the dollar index breaks below 70, which I know it ultimately do, then I think this orderly decline in the dollar, even though it's rapid, it's still kind of orderly, I think is going to become very disorderly and is going to turn into a rush. And I think it's also going to put a lot more upward pressure on the bond market, and it's going to call this whole phony economic recovery into question, because we've really been spared the brunt of the economic collapse, because we did have this temporary rush of money around the world into our bond markets, into the dollar, which enabled interest rates to go down, which gave the government the ability to finance the stimulus and the bailouts. That rug is going to be pulled out from underneath them, and we're going to be confronted with a real crisis, potentially as early as this fall. Anyway, that's it, everybody. Have a great holiday weekend. If I need to, I'll be back again over the weekend. Otherwise, I'll be blogging again next week. Take care.